The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's try to make some money. First by not losing money. Let's see, let me get my screen share thing going on here. Okay, we're going to talk about the good old, I don't want to talk about that. Let's talk about the S&P. Again, I discussed the S&P on this channel because a lot of your, I could just say, your retirement account is associated with it. And this downturn that we're headed for is real. It's, you know, it's 2 years ago when technical traders like me would discuss it. You know, we were, charged with promoting, fear porn and the like. And now it's not even a radical statement. We are overdue, way overdue for it. What we're looking at on this page here is a chart of the S&P 500 since this run since 2009 right here. And it represents the longest bull market in, I believe in the history of markets, history of America for sure. Quite a run. And this horizontal line you see here is a Fibonacci extension marking where the potential top is. And of course, these extensions are not intended to be exact. They are just areas where you should be concerned, where you should begin to look for trouble. Okay, so way back here, here being May of 2015 when we made this pullback, it was, or even once we started recovering from the decline in 2007, technical analysis allows you to make a rough sketch if you are an adherent to the type of technical analysis I practice, which is Elliot wave theory. It gives you the basis to make a rough projection. I think that method is superior. I do not use that method alone in isolation or in isolation from other effective techniques under the broad umbrella of technical analysis. Technical analysis is a broad field, and I use several disciplines within that. And I, of course, have a Patreon channel where I discuss much more than the S&P 500. I talk about cryptos on the Patreon channel. I discuss forex, and I pretty much live, me personally, my preferred medium is forex, because that's why I'm Dollar Will, because I trade things that are US dollar centric, and with the US dollar being the default currency, in the world, that is, when you follow the dollar and its inverse partners, meaning these things that trade opposite the dollar, like energy and metals, you pretty much have your finger right on the pulse of what's going on in trade in the world. So I can pretty much know what's going on everywhere pretty much just by watching a few charts. So watching a few things in the forex market allows me to trade the forex market. You can trade the options market, the futures market, the stock market. You can trade, all of the major markets out there with just watching a few key major items in the forex world. And of course, I teach it on my channel. If you're interested, scroll to the top of the chat, click the link, get some personal guidance, some personal training. More than that, more than the personal training, you'll get a sense of community and a relationship, because there's lots of free information out there. When I am self-taught, I would say, let me say that again, for better and for worse, I'm self-taught. The bad part about teaching yourself is it takes a lot longer. You don't have someone there that can just break you out of a bad habit. The good part about teaching yourself is that you're free to go where your creativity takes you, and you can discover things that maybe the person that's teaching you wouldn't, because you're going to make certain associations that maybe they don't, because you're a different person. You might choose to use different tools, go different directions within technical analysis that are different from what your teacher is showing you. You may, and that's the thing about technical analysis is, again, like I said, there's so many different tools that someone can introduce you to several tools, and you may not like any of them, but hey, we'll just, be free, find another one. Find my favorites tools are, I like moving averages. There are a lot of people that, as we say out here, that trade naked. Doesn't mean they sit in front of the computer naked, but they might be. All right. It means that they don't have any moving averages or anything on their charts where their price, where the price movement is. I'm not one of those traders. That's called pure price action trader. So then, like I said, I use moving averages. I don't have them any on here. I use that on my Patreon. I use oscillators, and I interpret the candlestick movements. And like I said, I'm an Elliot wave theory practitioner. So that's my recipe. Now, this S&P 500 chart is kind of funky. It's non-standard. Let me put it that way. And there's been some debate I've seen around about, whether or not there's been some quote market manipulation to produce this non-standard waveform. One of my Patreon members asked me to break down the wave count in this, and I told him it's pretty non-standard. This is pretty, but there are things we can do even when they're non-standard, when the wave structure is non-standard. That's why we don't use one method. We combine several things in technical analysis. So like I said, any time you cross like a significant Fibonacci extension point, when you start to see something weird happen, you have to take, you have to pay attention to it. So what's weird about today? Okay, we're above the Fibonacci area, and let's go down to the daily. Let's try the good old daily. All right. Crap. My moving average is messed up there because of the scaling, but don't worry about that. All right. Duh, that's a trend line. All right. Rule of trend is, I'm teaching just a little bit about technical analysis. As long as prices make higher highs, continue moving up, making higher highs and higher lows, that structure is intact. So the trend is said to be intact. This one is a little concerning. I was concerned about it on Friday. This little red candlestick here was a concern on Friday because it closed lower than the one before it. Okay. Next concern issue. Let's see. Okay, you had a prior support here, which is this high, this particular candlestick where the price fell, and then it kept going higher. So it broke above this prior support. Now, let me show. Okay, so this horizontal line is representing prior support. Usually, in healthy trend, price will come in this area, many times not go below it, but you know, that's kind of 50-50 and take off higher. Well, that didn't happen. It dropped below it. And it is now 12:30. Got a good bit of the day left. Okay. Let's see. So what the market is looking for. Oh, and on my little oscillator here, we're over. This is called overbought when it's extremely high like this. Normally what happens is it gets oversold. So we have a good deal to go. In short, we have a good deal to go. This is concerning for that reason. And we have a prior resistance here. So everyone's watching to see how far this is going to fall. But the main thing is when you get above a Fibonacci extension, which is what this bottom, this particular line is, which I showed on I was on the weekly, okay, which I showed on the weekly. You don't discount all those little things. You pay close attention. So we're in that trouble area, and we can't dismiss these types of structural violations. All right. Now I just moved to a weekly chart, the same chart. Okay, so this is last week's candlestick. Of course, last week contained Black Friday. That's supposed to be a great thing. And Black Friday was this particular Black Friday was historic. You know, had great sales. So there should be optimism. Now, I'm a technical trader. I do not believe or place much credence in the news and fundamental analysis. So why did you mention Black Friday, Dollar? Because I want to point out, I want to make this stay in your mind because people will recall when the news and a stock increase when those two events correlate. You know, if there's good news and the stock market rises, people attribute the rise to the good news. You know, well, Black Friday was historic. Why the pessimism? Why the pessimism today? Okay, so this is the candlestick of last week, which included Black Friday, and the low, if you look in the information box, that little box here on the left is jumping around. It says the low is 31.1744, and this low is 31.10. So we made a lower low, and so we have taken out all of the gain from last week, which was a good week, which concluded Black Friday, which was historic. None of that mattered. None of that mattered. It's all gone. And again, a week is 5 trading days, right? Well, yes, last week we had 4 trading days because markets closed on Thanksgiving. So in one day, we took all of last week out. No, I'm sorry, in one half a day, in 3 hours, okay? Because the market opened at 9:30 Eastern and it's just like 12:30 now. So how pessimistic is that? So tell me now about the value of news, okay? You know, The stock market, the way I look at it, it's a popularity contest, period. You can over assess it and try to make it more rational than it is by looking at sales and growth rates and all this stuff and PE ratios and all of that. Bottom line is, how much are people paying for it at any particular given time, and is the trend up or down or whatever it is? What's the state of the trend? That's it. Technical analysis, we look at what is going on in the price. Our view is what people think of it is reflected right there in what they're willing to pay for it. Show me the money. Show me the money. All right. You'll never know why at the time of the event happening. When something's happening right at that moment, you'll never know why. Any interpretation you hear about why a stock fell, that's just somebody guessing. Do you really? We trade that it's falling or that it's rising, not why. Why will come later. Usually after the profits or after the price destruction, after a steep decline or the steep descent happens, then you get the why. So that's basically what I wanted to show you. Let me look around. Okay. Let's see, what's this? Let's see, what is this? Oh, this was this one is flipping. Okay. Right. Yeah. Oh, I know what I wanted to say. Also, in Elliot wave theory, we look at the wave count. Like how many, this is called a diagonal wave. So it's all that, judging from this point forward. It's kind of non-standard too. Whenever we count and get to 5, 1, 2, 3, 4, 5, that's trouble. We start looking for the price to go the other way. Now, how far down it will go? Will this be a shallow decline and come here and come to this level and continue going north? We'll see. But it is possible that it could be something more than that. But we do not know yet. We're not going to count those chickens yet. Okay. What we're going to do is put a trend line. Oh, forgive this messy chart. Put one here. We'll see if the price breaks that structure, breaks that trend. And we're going to look at this horizontal line, this bottom one here, to see if it breaks below this particular support. For people in my Patreon class, I'm going to ask you, why didn't I count this? When I did my count and I said 1, 2, 3, 4, 5, why didn't I go 1, 2, 3, 4, 5, 6, 7? We're going to talk about that on the Patreon. You should be able to tell me why this move is insignificant. The count is 1, 2, 3, 4, 5. We'll see. So we're overboard on the weekly chart. We're overboard on the monthly chart. I don't know what's up with the quarterly. We're overboard on the quarterly chart, which is every 3 months. We're overboard on the daily chart. The size of this candlestick is scary in and of itself. This is the one for today. And again, today is only 3 hours long. Okay. If you look back at this trend, you don't see anything red. You don't see any level of pessimism this daggone large. No candlestick that's red looks that bad. Let me go out some more. This is pretty nasty. Maybe back to here. But this is a full day. We'll keep an eye on this sucker today. That's the day progresses. But this is what we're looking at too. What day is this? The 20th. I'm looking at the information box. November the 20th is when this particular one. If we break below this low on November the 20th, This move secondarily will be a major event for the automated uh, trading bots, the computers. A significant amount of stock sales are triggered by computers that look to see um, violations in the structure that I was explaining earlier, and making a low lower than this trend here that started here, making a low lower than the trend that the previous trend will be considered a significant move, especially with the momentum headed down and with so much more to go, space to go down on the daily chart, the weekly chart, the monthly chart, and the quarterly chart, and with us being over above a Fibonacci extension level, and with the violation of a trend line. That's a lot of warning. Just for me personally, again, I'm not telling anyone what to do other than I am telling you to go speak to a financial advisor. But I'm saying for me, my view of technical analysis, um, greed, either greed or stupidity would be the reason to stay in below this point, or under. And I will rule out stupidity if your financial advisor tells you otherwise. Do what they say. Go get some free advice. Don't listen. Don't let us, on YouTube be your only advice. Talk to your if you're in a bank or credit union. A lot of times you can get some good help there. Talk to your retirement plan advisor at your job. A lot of times they give good free information. You should definitely talk to them sooner than later. With this being the final month in the year, there's a phenomenon called tax. There's many times you can get sales at the end of the year. This is going to be tricky. Where do you? People have made a lot of profit in this stock market in the past year. If you sell now, this is another thing that's weird about this decline. We'll see how this month of December goes. If you sell your stock in December, you have to pay taxes on it in this spring, April 15th. Usually what happens, people try to hold on. They try to sell like the first trading day. If they want to cash in some profit, they try to sell the first trading day in January. Okay. The strategy would be to try to see if you can hold on and hold your stop until the first trading day in January of 2020, because you won't have to pay taxes on that until April of 2021. So if I continue to see a lot of selling in the month of January, that's kind of counterintuitive to optimism in the market, because people don't want to pay their taxes on their money in April of 2020. When they would rather pay the taxes in April of 2021. But if I see selling in the month of December, that says that there's something that the market fears much more than paying taxes, or than they fear much more than paying early taxes. There's something more greater to fear that's more important than postponing taxes. So actually, they're choosing to pay the taxes sooner. So whatever this bear is, or people's aversion to paying taxes, there's something even greater to fear than that. And to my logic, continued selling in the month of December suggests that there's something greater to fear than taxes. Okay. Let me check and see who's anybody's got any question, anybody riding with me. I'm gonna close this on out. Let me come over here and release this part. Oh, what's up? Raina Roman says to be self-taught is both cruel and cool. It is. It is. It does take longer, and you have to be real good at self-talk. You have to be the objective sort that can argue against your own point. If you don't have that skill, you definitely need to get in a class, of some sort with someone, and but yeah, and even if you can do it, you still need somebody to help you out of that loop, because what if you end up in a tie? You got two good arguments going, you end up in a tie. Let's see, what's up, Rael? Salute. How do you know when to use the Fibonacci or the Elliott wave? I use them concurrently. The mathematical principle of Elliott wave and the mathematical principle of Fibonacci is the exact same concept. So one, I guess you could really say that Elliott wave is an extension or a reinterpretation of Fibonacci trading. Yeah, it's like one discovery gave way to or facilitated another. So it's like accumulation. Whoa, what's up, CJ, CC? Yeah, we need to have another Patreon session. CC and Rainy Woman, and they are my Patreon supporters. They're in that group, and trading different strategies, different things. Rainy Woman likes gold. Everybody likes gold, but she likes to follow that particular market. And CC, she's managing her retirement account and keeping her eye on the British pound versus the dollar. Okay. So let's see. For my Patreon folk, I will see you guys over on that side because I have some other stuff we need to look at over there. And I'm in a hangout mood. So, I'm expecting this to be a good week before I got to take care of some business. Some business later with my my Homeland Security driver's license update. They made us do it all over again in Maryland. Yeah. But let's see, I'm out of here.